welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Good, good. Glad to hear it. There's actually a YouTube guy that I watch. He's a pilot, and he always does that. He's like, how you guys doing over there? Good, good. Glad to hear it. Hope all is good. I hope you enjoyed your day today. We got a Fed day. Lots to talk about here today. We are financial advisors at Jazz Wealth, and we're all family here. We like to say now, let our family be your family's advisors, huh? That's nice. It's wholesome. Also, jazzwealth.com/2023. All the 2023 numbers broken down into 2 simple pages. So if there's anything you've been questioning, what are the rules, what are the new numbers, contribution limits, tax brackets, all that great stuff, it is there. No strings attached. You're welcome to have it. And Haley will kick it out to you if you let us know you want it. And we won't, sell your information. We don't do that sort of thing here. We'll just send it to you and hope you keep us in mind at Jazz Wealth. You can schedule a call anytime right on the website there, and Eric's currently taking the calls, and he's happy to help you in any way. Maybe you join us. Maybe he points you in the right direction. With that in mind, let's talk about the Fed trying to point the stock market in the upward direction because there was no tough talk. That was my belief, was that the Fed might come out with, yeah, okay, we're slowing down, but we're going to be tougher here. And that just didn't happen. The stock market liked it a lot. In fact, some of the quotes that I pulled from the press conference there that he had, they were all positive, really. So we can now say for the first time that disinflationary process has started. In other words, inflation is starting to come down and they recognize it. He also said it's certainly possible that we could keep our target rate, or sometimes referred to as benchmark rate, at below 5%. Which is really where we're at now. The harshest thing that he said, I thought, is he said it would be premature to declare victory or to think that we've really got a handle on this. And so that was the toughest thing he said, and the stock market loved it there. He even said that he expects certain areas of inflation, in particular the housing area, to see a little bounce before falling again. So in other words, they were telling you, even if inflation ticks higher, we're okay with that. We see that possibly happening, and we think it's still going to go lower. That means if inflation starts coming in a little bit higher in some of these categories, just ever so slightly, that you'll likely see no change in comments from them. So that was a way for him to give us forward guidance as to what they would do. That also opens the door to inflation numbers maybe coming in a little bit higher and the market not really responding to it, whereas, in the short term here, if inflation ticked higher, that was bad for the stock market, right? Because it was presumed that the Fed would be tighter and tighter. So he gave us that heads up as well. Those are some of the main points that I took from it. And all of that translated into a stock market that said, great, we can go higher again and back to the previous high. So we're now clearly above the downtrend here. Every technical analyst would say that the downtrend is officially broken. We're above the 200-day moving average. All that stuff is looking good. Any pullbacks from here should be buyable. That would be the approach of that analyst, people that follow technical analysis, not necessarily me. Also, every factor of the market was higher today by 1% or more. So and this is good for your 401k. So if you have a small cap growth fund, small cap index fund, mid cap index, mid cap value, large cap value, large cap index, large cap growth, didn't matter. All of those should have had a really, really good day today. So finally, a little bit more consistent support for your 401ks out there. And we'll take it. The best performer was in small cap growth. Mid cap value was the best performer. Small cap growth comes in a second place by 0.1%. So not too big of a deal. Now, as far as the stock market goes, semis were the first to just rip, and they were the ones to stay the highest, the longest. So they were the first to lead the rally, semiconductors and tech stocks. And so that was really what kicked everything off. Tech stocks were the leading sector of the day. I should point that out. Only energy was negative on the day. So you got tech up 2%, everything else up on the day. Energy down 2%. Commodities didn't really participate in the rally today, as particularly energy commodities. We talked about this yesterday, where there's a big disconnect between the price of a commodity being down, right? Energy commodities in particular, heating oil, natural gas, and oil. But energy stocks are still high. And we said, well, that can't last forever. That's just not going to be the case. Well, today, it appears this first day that we started really seeing a crack there where commodities and the energy sector moved together. A little disconnected lately, so that changes a little bit as well. As far as the S&P goes, we know now we've closed out January on a strong note there, gained over 6%. Bodes well for the rest of the year. You guys know that. Don't have to probably show you that again, but I will. When January is positive, the rest of the year it outperforms any other year on average. So typical gain in a year for the S&P, 7.37%, the average, I should say. 10.91% is the average gain when January is positive. So that's a good sign there if you're looking for that to happen. By the way, when January is positive, the rest of the year is positive 78% of the time, average gain 9.1%. So went a little deeper for you guys to get some stats on that. Now we're comparing that to, so when January is positive, what do we have to look forward to? We have February through December. So what we're doing is saying if this month was positive, then we have February through December. What are the stats there? 78% of the time, that window is positive, average gain 9.1%. If you were to say, let me see the performance of all Februaries through December, in other words, take the average performance of the year, just drop January off for every single year, what does that look like? So we could tell if 9.1% is outperforming or not. In fact, it would be. The average February through December performance is only 6.5%. So January being positive really helps boost morale or the bulls, I guess, their appetite for buying there. So all good signs. And that would lead you back to people that say, we got a technical break in the market. So we're moving higher there, no downtrend in sight for the moment. And we also have positive seasonal expectations. So you put those two things together and you're going to start seeing people call for pullbacks to be buyable instead of reasons to run for the hills. That could change, certainly, but that's what we have there. The only negative really that I have at the moment for the S&P is that 10 names account for over half of the entire S&P 500's gain year to date. So you got 505 different stocks that could potentially move the market, and there are 10 of them, there are 10 of them that account for over half the gains, 54% of the entire gains for the year. So in other words, S&P's up 7.25%, so 3.6%, somewhere in there, 3.65% has come from 10 stocks, and that's because of their weighting. So naturally, you're going to see the names like your Apple and Meta now, even more so Meta after hours with their earnings there, Amazon, Tesla, NVIDIA, both classes of Alphabet shares, Microsoft, Disney, and Visa. So that part bothers me just ever so slightly because what if those 10 names take a break? Or what if those 10 names start having real weakness? People decide to take their profits and go invest it in discounted areas. That's going to drag down on the market. So I wouldn't say you can call the all clear just yet. And I never really like it when the market's being lifted by just a handful of names. I especially don't like it when we have sectors that are lifting the markets. Here we are showing the contributions to the SOFR's year-to-date gains by sector. The tech sector accounts for 40% of the year's gains. What happens if the tech sector stops moving from here? Well, we need a lot of work done by these other sectors here. So consumer discretionary is the other one. So we have two very cyclical sectors that are easily manipulated by a slowdown in the economy that are currently driving what, 40, 50, 65, 63% of the entire year's gains? I don't like that. You like to see this a little bit more balanced. It's hard for it to be balanced because of the weighting in the S&P, but you like to see a little bit more consistency down here, and we just don't have that yet. So if I could say one negative there about the market, that would be the negative for the day. And hopefully I don't have any more to say. The NASDAQ, of course, doing really well. Anything tech related today just absolutely crushed it. Like I said, you started off with semiconductors, anything in that space, NVIDIA, Texas Instruments had a great day. I want to point out AMD. We'll talk about their earnings in a second. We were talking about that yesterday. It was just itching to break above that range. Itch is scratched. There you go. You got Meta with its positive gain throughout the day, and then after hours up quite a bit, and that's what happens when you buy back $40 billion worth of your shares. That's a B, $40 billion worth of shares. They say that's the best place to put their money, and shareholders agree. Yeah, that's basically that one. The NASDAQ itself ended up closing up over 10% year to date, or 10% for January. And remember, that has not been seen since 2001. The negative there, though, remember, is that in 2001, we did have that gain of double digits, but then we fell 30%, right? So maybe that's one other little negative thing you could say there. I don't want to sound that way, but that is currently what's happening. The Russell, of course, performing well today. And remember that the small cap growth area was the second best performing area of the markets here today in terms of breaking it down by factor. Same thing. Look at that. Just trying to break above that range. Now you have sort of the all clear for the bulls in small caps to go ahead and participate. Our small cap fund is doing really well, so I'm very happy with that. Even gold got in on the mix today. It's not bad, gold. I'll give gold a little bit of support there, right? Refuses to pull back. Not too much going on over there. Of course, bonds were very active today. Rates went down. Prices went up. We're still within this little range here, so I think it's hard to say rates are going to continue to move lower, but that's a really positive sign for those of you that are looking for lower rates to buy a house, buy a car, right? Use some kind of consumer debt. So not too bad there. Our wine and wealth class last week was on return on capital. So we started off very simple and went into the woods in terms of how you can increase your return on capital by just, working your way up the ladder. I wrote them all out, everything from high interest savings accounts all the way to utilizing options in portfolio margins accounts. We went through the whole gamut there. So I think that class is really important for 2023. This week on our Wine and Wealth, we've decided that the first week of every month is actually going to be geared towards our new clients, kind of an orientation, what to expect, all the tools you have available to you, because as we grow, we realize there's a lot of stuff, right? We can't have you just wandering around feeling like you're not getting the help you need. And so we'll be talking through that. That'll be tomorrow night if you want to come hang out. If you're not one of our clients, I hope you'll keep us in mind. That's what we're here for. Well, we want to work with you and hope that you want to work with us. Here we go. Stocks in the news for the day. There's a lot. I could spend the whole class on this. There's like 4 dozen things we could talk about here. I'm going to start with Peloton first because congratulations to Peloton, by the way, but they finally beat on earnings. Not something that's happened for them in a long time. I stopped looking back to see where that was the case there. And positive comments out of management. They said, guess what? We're going to have a positive free cash flow by the end of the year. So yeah, you guys are buying the expensive bikes out there and you're pedaling your little butts off, and yeah, good for you. Good for you. Regular bikes do the same thing. You just ride around the block or something. Save your money. T-Mobile added 1.8 million new subscribers, a little low on their forward guidance for full year subscriber adds there. Didn't matter. It was good enough for investors. And plus, this is a relatively strong stock. So any good news for people to hold their position and maybe new people come along to buy is good. When you have a stock that's outperforming, that is strong relative to the market, it's very easy to get the momentum to continue. That's why they teach beginner investors that you don't fight the trend, right? The trend is your friend, and flow downriver and all that stuff. That is why those stocks are riding the highs, man. Humana in the news here. I didn't look through too much, in all honesty. Humana came out and said, well, we did better than expected on earnings. We're going to keep our guidance as expected. What I found interesting was pretty bold by management. They said, our growth this year will be higher than the industry. Wow. I thought that was interesting. They're just calling it out. They're saying we're going to beat all the other companies. There's not a lot of them, but we're going to beat all of them, and our growth will be better than them. They basically said, come on down. Come invest in us. We're going to beat the growth of everybody else. Otis Elevators, or now referred to as Otis Worldwide, slight beat on earnings. The focus usually for these guys is the backlog. And their backlog remains really, really strong, actually. So good for them. We talked about AMD already and their performance there, better than expected earnings, guidance, everything is good there. They gained a little bit of market share from Intel, and they're able to keep their hefty 51% gross margin there. Even though we saw a little slowdown in PCs, just know that if you want to remember this, or you're somehow as dorky as I am, geeky, that's the nice way to say it, geeky. If you want to remember this, as you go into the first part of the year, PC sales slow down. it's one of those seasonal stats that things I refer to. PC sales slowed down, so that wasn't a shock that their sales slowed down a little bit. You've seen that across the board anyways. Nonetheless, really, really great performance there. Lastly, I'll point out Rivian. They're laying off 6% of their workforce there. They're going to have some troubles here. It's a tough one. I know some of you like this, but how are they going to compete? Right? We have Tesla lowering prices, General Motors lowering prices, Ford lowering prices on their EV vehicles, EVs. So how does a company like Rivian compete with this? I think they've got to. They did well when they were living through the era of high margin, high priced electric vehicles. Now it's getting more competitive. I'm not so sure they're ready to play along in that space. Our Jazz After Dark last night, the night before, Jazz After Dark was four mistakes that people make over 40 with their finances there. Last night we talked on Roth IRA, a way to pay for your kids' college with the Roth IRA. So hopefully you'll check that out. Yeah. And tonight, by the way, tonight in our Jazz After Dark, we'll be covering some different types of tips. It'd be kind of interesting to play along tonight. I'm going to have to ad-lib just a little bit because, the video cut off, right? So you're going to see two Dustins on tonight's class. That may or may not have been my mistake. I don't know. Our research site, you can join us there if you like. If you can't be a client of Jazz, it's $13 a month if you want to support the channel, support us here. We do have the top stocks that will benefit from the Inflation Reduction Act, which remember, that's live, baby. It's happening. So you might want to catch up on that. If you're a client, it's free. You can actually see it in there and all is good for you there. I will take a second to try to answer some questions. While I'm doing that, tomorrow, hold on to your britches, because tomorrow, Apple, Amazon, Ford, Alphabet, Qualcomm, and Starbucks, that's all after hours. In the morning, you got Eli Lilly, Hershey's, Honeywell, ConocoPhillips, Cardinal Healthcare, and Merck, and Black & Decker. If you want to see some Black & Decker earnings, they're coming out as well. There are a ton of earnings coming out, which is just what it is. Hey, when January is green, how does February and March do statistically? Well, on that slide earlier back, we talked about that. February tends to have a slight gain there. 0.37% is the average there. And just scroll back a little bit in time, you'll be able to see the visual for that. Hey, Dustin, have we seen the market break the technical patterns like what we saw today and still have the market continue its bear market and form a new low? Can it happen? Yeah. It's becoming less and less likely, right? Because think of the bias. So now we've broken the downtrend. All the technical traders, they can hope for a new low, but remember, hope is the worst four-letter word you can use in the market. So now they have to assume that their pattern is broken. And so they assume pullbacks are buyable until proven otherwise there. Yep. What do you think of the starting position here? What do you think of starting a position here in Moderna for growth, XLV, low PE cancer drug? I don't follow them often. I don't like the healthcare / biotech space, right? So I don't have anything exciting to add to you. That would be one I'd have to just be honest and say I don't really follow along. It bores the living daylights out of me, to be honest, and my keyboard's messing up. There we go. Yeah, sorry, there's nothing good there. When's a good time to start trimming positions? I might have too much weight on Meta, but I don't want to trim too early. After the move that we have after hours here, if you don't sell some shares to all those people that are excited to buy the stock, where's the stock going to go? There are buyers sitting there right now, and they're clamoring to buy your shares. If you don't sell them to them, who's going to do it? That's the way I look at big moves like that. You know what I mean? Yeah. And by the way, I don't have it ready for you. I'm sorry. We'll cover that tomorrow. I won't even tease it there. A little Jim Cramer jab there. Grinding retire. You got your West Rock. Let's see. And you got a covered call at 40. Oh, good. Well, so there you go. You basically can use maybe a little follow through tomorrow to roll it if you want. There's no sense in hanging on now because it's not going back to 40 before your expiration there. You want to start a position in CVX. They did announce the buyback there. That is for sure. The trouble that I had, I'd wait. I can't like tell you when to buy, I guess, but I would wait because of what we talked about before. No support from commodities. Until you get a little support there, why should CVX continue to outperform? What's going to do it? Amazon's had little layoffs compared to other big tech. Specifically, how do you compare that? I would say their layoffs have been in line. However, they naturally have a ton more employees, but I wouldn't see it that way. When do the next inflation numbers come out? That's what I was just thinking. Yeah, I was trying to find the my little calendar, and I didn't have it ready. That was what I was talking about just a second ago. So since you asked, let's go over here. What do we have? Jobs numbers I know come out on Friday, which means you're 2 weeks out. Yeah, oh, no, maybe 1 week. Let's go over here. Employment. Yeah, it's 2 weeks out, right? Yeah. So there's 2 weeks after the jobs numbers. So you have right around Valentine's Day. Not right around. Valentine's Day is when they come out. Yep. Yeah. You don't think Powell's words are respected there, huh? I think the market would disagree. I think the market would clearly disagree. Today's a great example there. Yeah, who's Justin? What's this Justin guy? Dustin means brave fighter. Justin means cowardly sheep herder. The more you know, right? The more you know. Okay, I'm going to wrap it up there and get back to work, do what we do here. Thank you for all of you who have joined us here at Jazz Wealth. Hope to treat you right and get to participate. And you also know our Wine and Wealth will be tomorrow. So I hope you'll join us for that little orientation. I'll keep it short, but go over all the cool things that we can do for you, will do for you, and the tools that you have available to you. And I'll see you guys back here on the Close and Beat tomorrow as well. So enjoy the rest of your evening. Adios.